Hello everybody, my name is Joe Swingle and I'm part owner of simplestarthomes.com. We help people go from renting to owning. So if you are a person who's been renting for a while, can't get a bank loan, but want to get into home ownership and can afford home ownership, this video is probably for you. So we'll get right into it. Most of our clients fall into one of three categories. We call these categories penalty box buyers. People who might not be able to get approved for a traditional mortgage at this time, but can certainly afford rent and therefore can probably afford owning a home. So the three categories we have are people with bad or no credit, people who are self-employed, maybe they write off a lot of their income, maybe they're a trucker, maybe they're someone like me who's self-employed as well, who doesn't have consistent income or work history, but makes great money, or there's someone with an ITIN. There's somebody who may be here legally, but they don't even have a social to show. And a lot of banks will not actually lend to you if you don't have a social in this country. So there are two different ways that you can go from renting to owning that we offer for our clients. The first way is your classic rent to own, otherwise known as a lease option. Now, no matter what avenue you go, it's gonna require some capital. We're not looking at your credit. We're not looking at your employment. All we care is that you can show enough proof that you have income coming in and can afford the payments, and that you have what we call the option fee or the down payment. The minimum requirements to get into a home is always going to be about $10,000. If you have $10,000, there's really nothing that will hold you back from owning a home at all. So the way that the lease option or rent to own works is your $10,000 will purchase a 5-year option agreement or purchase contract that has a fixed price during that 5-year period, where during that 5 years you can actually work on whatever it is that's holding you back from getting approved for permanent financing. That could be your credit. Maybe you just don't have good credit. That's an easy fix. We will actually help you go through credit counseling so that you can get approved within 2 to 5 years for permanent financing, whether that permanent financing is from a traditional lender or from us extending you owner financing. We do both ways. So the pros of a lease option are you get that 5-year period. Some people don't do 5 years. We always usually keep our options at 5 years, which means that you have a lot of time to fix whatever it is that is holding you back from actually getting approved for a mortgage, for permanent financing. That's pro number one. Pro number two is you have fixed appreciation. If I am selling a home to you for $300,000, and you don't execute your option for 3 years, and the home's value goes up a bunch in that 3 years, let's say it goes up 5% each year, we usually only factor in 2% appreciation per year. So if you purchase an option agreement for $10,000 and you've got 5 years to get approved for permanent financing, then at year 3, when the home's appreciated 15% more than what our option agreement is for, your agreement will have only appreciated about 6%. You get to keep all that equity. So in 3 years, if your option comes out, instead of 300, it comes out to 320, the home's actual value will be worth 350. So you get to keep that appreciation. That's part of why it's a benefit for people who want to buy this way, is you get to keep that appreciation. We're locked in as the seller into a fixed appreciation schedule for you. The benefit also with that is your rent is also at a fixed appreciation. That means that we cannot, after a year of your lease, because you've got a 5-year term, we cannot change the lease amount next year. Whereas your landlord, if you've been renting for a while, can bump your rent up 40% in a year if they want to, and if the market pencils for that. Here in Arizona, rents will go up 40-50% in 1 year, no joke. I have had it happen to me. I know people who are clients who it happens to. You get to avoid all of that by doing a lease option. You get to retain the appreciation for that 5-year period. There's a lot of flexibility, which we'll get into later. You could transition from a lease option to owner financing, which we're gonna get into at the end of this video. And then easy approval. All you need to get approved is to be able to convey that you have a low enough debt to income to be able to afford the payment. And all we really need for that is a couple of bank statements, a few pay stubs that show you have enough income to afford the payment, and then that you don't have too many liabilities that are going to prevent you from making the payment. As long as you have the $10,000 option fee and you can afford the rent, there is nothing holding you back from doing a rent to own and going from renting to owning today. So the cons with the lease option are there's no pay down. Your rent during this 5-year period does not go towards the purchase price. That would be owner financing, which we're going to get to next. Maintenance, you get the benefit of being able to add to the property. You have ownership in the property. So that means if you buy it for $300K, that's your option agreement. You can always add a room to the house as long as it's legally permitted and increase the value by 50 grand and go refinance for that amount instead of the 300 that we sold the home to you for. And you get to keep that extra equity that you built in the home. That's the pro to ownership. The con to ownership is the maintenance is your responsibility. So all in all, this is probably the most popular thing that our clients do because it requires way less money up front and usually monthly. Usually the rent amount is lower than what a mortgage would cost or owner financing would cost. And you have all this time. You've got a full 5 years to figure out if you want to do owner financing and bring more money down, or if you want to just go get financing from a bank traditionally. So, and we'll work with you on whatever your option is. Which brings me to option number 2, owner financing. The pros here are you get immediate ownership. There's no banks. You will never have to use another lender again if you don't want to. We usually have fixed interest 30-year mortgages, no balloons, no prepayment penalties. So you don't have to be racing the clock to try to refinance these homes. For the most part, this is how all of our loans look. We own the home, we will extend you financing without you going through a bank. We will make it a fixed interest, no balloons, no prepayment penalties, usually just a 30-year regular amortization, and you'll never have to use a bank. And you'll own it right away, and every payment you make will ultimately, a portion of that will pay down the equity in the home over time. The cons to owner financing are it requires a lot more down than a lease option. So if you're somebody who's ready to own and you've got a good amount down, usually it's at least 10% down, sometimes more. But if you have at least 10% down, then you might want to go this route because you can get immediate ownership, you can get equity pay down, but that con is obviously there that you're going to need to bring more down. The higher interest, sometimes these loans have higher interest since you're a penalty box buyer and a regular bank won't actually lend to you. The other thing to keep in mind is that's not always the case. You don't always get a higher interest rate. There are some homes we're financing to people at lower rates than current mortgage rates. So that means a lot of our homes, because rates have gone up so high, they're at mid-7s for someone with a good credit score. What this means is if you find us and you go to simplestarthomes.com, then if a bank won't even lend to you at 7.5, let alone at all, you can, even with bad credit, self-employed or ITIN, come and own a home with owner financing, bring a down payment, and then have a lower interest rate than somebody who has a 700 credit score and goes through a traditional bank. We have plenty of properties available right now where the interest rates are lower than current mortgage rates. So this is a really great option if you want to get into ownership. You have the down payment. The cons are obviously you have a high down payment. Your payment's going to usually be higher than a rent to own, but sometimes your interest rate is actually less than current mortgage rates. And then obviously the third con is it's more expensive to buy with owner financing. The prices are usually very high, not crazy amount higher, never more than about 10% higher than what regular homes are going for, which in the grand scheme of things is really nothing when it comes to home ownership. You're building equity, you own a home, you don't have to use a bank. There's a lot of benefits there with owner financing. So the one other con here that I didn't mention is the approval process for owner financing is a little bit more involved than with the lease option. Lease option is super easy. Like I said, you just need pay stubs, you just need to have the option fee, that's it. Owner financing, you need to have that down payment, but you also have to go through underwriting and they're gonna actually verify your debt to income and make sure that the payment that you're getting on the home is actually affordable. So it's a little bit more of an involved process to do owner financing. However, pretty much every one of our clients, even if something came up, we were able to work with them and get it pushed through with the underwriter. As long as their income's there and they're gonna be able to afford it, we can usually get it pushed through. You're certainly gonna have, if you're watching this video, you're certainly gonna have a lot of questions. We're gonna actually do a Q&A. You can leave comments in this video. Subscribe to our YouTube channel. We're gonna actually go over more Q&A if you ask us stuff in the comments, and go over this process a little more in depth. But a few of the things that people ask about is our level of flexibility with these homes. A lot of this inventory we own ourselves, which means we're very flexible with working with you. For example, let's say you're an ITIN buyer and you don't plan on ever really getting citizenship or something. There's gonna be factors that do not allow you to go and get a bank loan probably within this 5 years. But at the same time, you also don't have 10% down. Let's say it's a $400,000 house, you don't have $40,000 down plus closing costs. You just have the $10,000, but you definitely need owner financing. We can work with you, and we've done this with many clients where we transition them from a rent to own to owner financing. And the way that works is they can start with the rent to own, they can purchase a 5-year option for $10,000, and during that 5 years, while they rent, they can slowly build up and keep putting more down until they're able to bring that full $40,000, and at that point, we would just convert it to owner financing. They would be the owner. All of their payments for the option fee towards the down payment will go towards the equity. They would be renting in the meantime while they work to get that down payment and bring it to the table. And then, so they can lock their place in, they don't have to lose the house to somebody else. You know, if they like the house and they have the $10,000, as long as they can continue to bring more money down during the time that they rent, we'll actually convert it to owner financing later. We'll get them approved. We'll know that they can get approved because they've already been paying rent for the last few years on the home. And then they'll just be able to transition seamlessly into owner financing, and then they would successfully be homeowners then. Interest rate, if you bring more down, we can always reduce your interest rate, almost always. So again, sometimes owner financing has high rates, but in this climate where rates are already very high, if you bring more down, you can get your rate below what a person who has great credit and isn't a penalty box buyer would have. So we can be flexible with interest rate, we can be flexible with your down payment by financing it to you over time. We can be flexible with your credit. If you have bad credit, it doesn't matter. We can report to the credit reporting agencies to improve your credit. We also don't have to report to the credit reporting agencies. We're not gonna come after you if you don't make payments. If you miss payments or whatever, we're gonna try to work with you. And then of course, your security deposit. If you're doing a lease option and you're bringing $10K to the table for that option fee and then first month's rent, oftentimes people will want a security deposit. A lot of the time, we'll just waive that. As long as you can show relatively good history, we'll actually waive your security deposit altogether. If you have pets, if you have prior evictions, if you have other problems like that, it's not that we won't let you do this, because those things don't matter for this program. You can totally get in with evictions, you can totally get in no matter what your history is. It's just we may ask for a security deposit just to hold in the meantime while you work towards getting owner financing or getting approved for a traditional loan. So that's kind of how we can get more flexible. If you like what I'm saying in this video, if you think that we might be able to help you at simplestarthomes.com, then subscribe to our YouTube channel, follow us, and reach out to us for any questions that you may have.